I've never seen anything like this.
Freeze customer accounts.
The collapse.
Complete failure. That liquidation of Three Arrows Capital, lender BlockFi,
Celsius.
Terra USD stablecoin.
When FTX filed for bankruptcy, it all came to an end.
2022 has been a year chock full of crap storms for Web3 as a whole. From a global crypto market cap of over $3 billion, this now stands at only around $800 million, and things are not looking up. We wouldn't blame you if halfway through the year you ran out of bandwidth and just went forget it. But for those of you who might still care, let's cut through the noise and highlight some of the most important things from this very turbulent year. At the beginning of 2022, everything seemed business as usual. In fact, things were still looking up, with news like OpenSea hitting the highest trading volumes in January. The bull market was still very much present as we went through Q1 of 2022. And there were still predictions of further highs for leading cryptocurrencies given their strong start to the year. It was really in May when shit actually hit the fan. One of the biggest stable coins in the industry, Terraform Labs Terra USD, or also known as UST, depegged from the US dollar. You may not know the name of the president of Kenya, but you sure as hell know who Do Kwon is. It didn't take very long before the stablecoin plunged into a free fall alongside its companion token, Luna, which ironically was meant to stabilize the stablecoin's price. The crash saw about $45 billion wiped out in just 2 days. Do Kwon is now wanted by the Interpol and is facing a $56.9 million lawsuit here in Singapore. Terra Luna was alighting for a match that burned down a huge chunk of the industry. June and July, coming off Terra Luna's debacle, was a nerve-wracking time for crypto. Even Ethereum and Bitcoin were down over 50% from their all-time highs. The second domino of a really crap year saw Celsius Network bar its 1.7 million users from withdrawing or transferring funds that total around $20 billion, citing extreme market conditions. A month later, they filed for bankruptcy, saying their assets had plummeted 80% due to insolvent investments and loans given out to multiple decentralized platforms. This cascading effect of crypto winter took its next victim, Singapore-based Three Arrows Capital, also known as 3AC. The crypto hedge fund managed around $10 billion in assets at its peak, but even it failed to meet margin calls from its lender. The aftershock continued when Voyager Digital paused customer withdrawals, citing 3AC's failure to make a $665 million repayment as the cause of their financial woes. Needless to say, they shut down soon after. Vault, a Singapore-based crypto lending platform, also halted withdrawals in July 2022, and nothing has been heard of them since. Another Singapore-based exchange, Hodlnaut, came next, losing a majority of its stake, which comprised mainly of customer funds in the Terra ecosystem as it became insolvent. Following this, the Singapore police force demanded that they transfer the remaining assets before the company paused their withdrawals. Soon after, they declared that they lost over $190 million due to their exposure to Luna. The only bright spot for the industry as a whole was probably Ethereum's merge, which happened in September. While optimistic speculation put Ethereum in the spotlight, crypto prices in general, including Ethereum's, failed to rally. Besides the technology and network upgrade, whether it's boosting sustainability or reducing energy costs, it had little to no effect on market sentiment, nor did it have any effect on the market as a whole. And just when we thought the storm had passed, what came next was the nail in 2022's coffin. One of the biggest crypto exchanges in the world, FTX, filed for bankruptcy in November due to mismanagement of funds, followed by huge volumes of withdrawals and massive sell-offs of their native token FTT. It all started when investors realized FTX's hedge fund, Alameda, was using FTT to make risky trades and loans. Rival exchange Binance then made a public declaration that they had sold off all their holdings, which prompted investors to follow suit. The entire saga is going to go down in history as the worst collapse in the industry. The retail market for crypto at this point seemed beyond repair, as investors could only watch as their money disappeared overnight. Every platform, exchange, and company in the industry is still reeling from FTX's domino effect. But you can't expect investor confidence to be strong when even crypto behemoth DCG is reportedly $2 billion in the hole. Even Singapore's state investment fund Temasek announced that they were writing off their $275 million investment into FTX. And another of its portfolio companies, Amber Group, is also now in trouble. They've laid off 50% of their employees and is allegedly on the verge of bankruptcy. Suffice to say, the entire 2022 was nothing short of a catastrophe for the entire crypto ecosystem. But on the other side of it all, the promise of advancement in the space still remains optimistic, as there are plenty of companies still trying to hold it down for Web3. Consolidation has become the new buzzword of 2023, with what we hope is crypto winter weeding out all the bad actors. Crypto winter has become a time to refocus and build more legitimate projects with more long-term views. And those that survive will only come out stronger, and that's really just a hope that we can have. All said and done, we are bundling up and bracing for a long, cold winter.